So if we go to gold and we look at the weeklies, I think this is the best way to illustrate gold. Okay, this is 2 weeks ago, this is last week, and we can see currently we are smack bang in the middle of value area. Now, what I want to point out is how tight values become. It's almost like we're contracting in a range, or we're spending more and more time inside of the inside range, and that's really, really important to understand because it means this market's going nowhere fast. Okay, not unless we're seeing significant move in the dollar or significant risk off, are we going to see this gold breakout. So at the moment, you've got to employ counter trend strategies, you've got to employ value strategies because momentum strategies simply aren't working. Now, what I do want to point out is we did see a little bit of volatility through the Friday low yesterday. We can see gold really, this is the daily profile obviously, we can see gold spent the entire day inside Friday's range and suddenly took out the previous day's range, and since then has sat again in a tight $1.5 $2 range. So it's very much a market that's doing nothing, a one-off move, and then it stops and dies. Now factor that into your analysis. What I will say about today, it's very unusual to see this not get tested and filled. It was done I think 6 o'clock last night if I'm not mistaken, so don't be surprised to see if we do take out today's highs that we do come in and fill in around these single prints. Okay, to the downside obviously, we can see that the market has left those singles, so we've got that little bit of overnight initiative. We have got the value area low from last week at 09s, but then the real key level, and I want to just talk briefly about this, the real key level is 1300 in this gold, and I'll tell you why. If you go look at a spot chart, you'll notice that over the course of, not just last year, in other words, when we were at, sort of September, October, the market kept failing to get above that 1300 and hold above that 1300. We've then come down a number of times and tested and failed again to get below that 1300. We can see really, the market in Feb tried, in March it tried, in sort of late March again it tried in the end of April, it's tried in the end of, in the middle of May. It's really trying to get below 1300, but cannot sustain the close there. So for me, we've got a really important little area at 1301s. If that goes, okay, what we've effectively got is you've got anyone else is still long, likely to unwind. So keep an eye on that 1300 as a bigger time frame, type play. If you get through there, you should see that gold navigate back down towards that 1250 and begin to settle inside another range. Don't forget, obviously, we have been stuck in this 1320 to 1370, $50 range for almost 5 months now. So it's a very, very mature range that if we break, we could extend lower. Otherwise, we're likely to remain within this range for the next couple of days and weeks. In terms of that, let's just quickly look at on the 30-minute day. You can see that consolidation now. It's almost 10 days of it. I don't really want to draw a trend line because that's a bit misleading, but we can really see how the market is. We're kind of coiling now inside this range. If I just zoom that out, we can see sell-off, nice initiative taken in April, and now we're just stuck inside this almost $15 range, going nowhere fast effectively. So keep an eye on those levels, 1300, 1302. If that goes, obviously we are likely to see a continuation of that sell-off theme. Okay, so let's get on to the oil then. Let's just have a look at one or two charts in the oil. Again, a fascinating market, but the best way to look at it is just get a weekly chart up. So we can see yesterday we spent the entire day inside last week's value area. It's a market that is pretty much at the moment taking breathers and then accelerating, taking breathers and accelerating. However, the ranges in oil are very much expanded. If you get up some sort of a variance chart of the oil, you can see that we are getting some lovely ranges in oil, well over $1 every single day. Now, a few things to point out. Note 1, 2, 3 days of lower highs, lower lows. Okay, so the pattern at the moment is for lower highs, lower lows. We can see that at the moment the overnight session has failed at yesterday's high. Don't be surprised to see the initial move to the downside. And again, if you're going to go with patterns, we want to target obviously the break of yesterday's low, and we want to keep playing within that pattern until such a point we take out the 71.26. What I will say, if that 71.26 goes, there's a very unusual looking Thursday profile, almost a bit of a ledge. So don't be surprised to see if yesterday's high goes. You really want to be targeting longs all the way to the break of 71.74, and then more importantly looking for a break of 71.88. Now, the last thing I want to point out with regards to the charts, with regards to the markets at the moment, both oil and gold, is that we are very much, in terms of the oil, in price discovery. Okay, we haven't been here since 2014. No point in scrolling back. No point in going and pointing out all the levels to the upside, because you're going up against big time frame players that are initiating at higher prices. So, in terms of the downside, all I want to say is with oil, that not OPEC, that Trump, Iran re-sanction imposition. That's the real key. 62, 67, 61. If that goes, we should see a deeper drop. But at the moment, you can see this blue line. That's the moving average. It's very steep. Don't go against it. There's no need to. We're going to very likely at some point retest last week's high. And once that goes, anything can happen. It is price discovery mode.